Hello traders, you're welcome to this video and I especially welcome you back to the Forex Geek channel. Now in this video we are just going to be diving into a powerful yet often overlooked Elliott Wave pattern, and that is the running flat correction. Okay, now if you've ever been caught in a market move that seemed like a reversal but then suddenly continued in the original trend, then you might have been looking at a running flat pattern. Understanding this pattern can give you an edge in predicting market movements and making better trading decisions. So stick around, because by the end of this video, you'll know exactly how to identify, trade, and avoid common pitfalls when dealing with running flats. Okay, now before we get started, make sure to smash that like button and subscribe to the channel. Turn on notifications so you never miss a key market breakdown. Let us get into it. Okay, so what exactly is a running flat correction? In Elliott Wave Theory, a running flat is a three-wave corrective structure labeled A, B, C. All right, the running flat is a three-wave corrective structure labeled ABC that forms during strong trends. Now, you will most likely find this pattern during a strongly trending market. Unlike other flat corrections, this pattern signals a market that consolidates temporarily before continuing in the original trend. Now, here's how it is structured. Wave A is a three-wave move, as you can see, in the opposite direction of the main trend. It's usually in the opposite direction of the main trend, okay? Then wave B is 1, 2, 3. This is wave A, sorry. This is wave A, 1, 2, 3. It's in the opposite direction of the main trend, right? Because this is the trend. The trend is a bullish trend. This is for a bull market. So wave A is in the opposite direction of the bullish trend. In this case, is the opposite direction of the bearish trend, right? So wave A is in the opposite direction of the main trend, basically. Then wave B is a three-wave move that extends beyond the start of wave A. You can see beyond the start of wave A. Then wave C is a five-wave move, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5, that fails to break below the end of wave A. That is for a bullish market, or fails to break above the end of wave A. That's for a bearish market. Okay, now the running flat is unique because wave C does not complete a full retracement, meaning the correction ends early and the trend resumes much quicker than in a regular flat or expanded flat. We've talked about a regular flat and an expanded flat in the previous video. You might want to check that out. Now, a running flat occurs when the market is in a strong trend, right? And there is not enough selling or buying pressure to push price into a deeper correction. Essentially, traders try to push the market against the dominant trend. Now, one of the things with these patterns are, they are not very they're not very easy to find, right? So you might not always find them on your chart readily, okay? But whenever it occurs, at least you can have an idea as to what to do next. You can have an idea as to how to trade these patterns whenever they show up. But it doesn't mean that they show up frequently, okay? Because they don't exactly show up that frequently, okay? That is the reason why I have to refer to a diagram. All right, now a running flat occurs when the market is in a strong trend. All right, remember that is a key point to note, okay? And there is no enough selling or buying pressure to push the price into a deeper correction. So traders try to push the market against the dominant trend, but demand in an uptrend or supply in a downtrend is too strong, leading to a shallow correction and a continuation of the primary move. Now, this setup can confuse traders who expect a larger pullback before the trend resumes. Instead, price rejects early and moves back in the trend's direction, leaving unprepared traders behind. Now that you know what a running flat is, let's quickly talk about how to identify it on a price chart. Now, you have to look for the 335 structure. Unlike impulsive moves, a running flat consists of 3 waves in A, 3 in B, and 5 in C. Okay, if you spot this formation, you are on the right track. All right, now you have to watch out for wave B. If wave B moves beyond the start of wave A, that's a key clue that you may be dealing with a running flat instead of a regular one. And then observe wave C. Unlike expanded flats where wave C breaks past wave A running flat has a shallow wave C, that fails to break past wave A's end, as you can see. Fails to go beyond wave A, So this early rejection is a strong continuation signal. All right. Now, it's also important to use Fibonacci retracements when wave B often extends 100% to 123.6% of wave A, and wave C usually finds support or resistance at the 78.6 or between 78.6 to 88.6% retracement level of wave B. Okay, so that's one of the things to look out for. Fibonacci retracements can help, all right, because wave B often extends 100% to 123% of wave A, and wave C usually finds support or resistance. That support is in the case of a bull market, resistance is in the case of a bear market. So it usually finds support or resistance at the 78.6 to 88.6% retracement level of wave B. All right. So how can you trade a running flat correction effectively? Here's a step-by-step approach. The first step is to confirm the pattern. Before entering a trade, ensure that the market is in a strong trend and that the 335 structure of the running flat is complete. So this will prevent you from misidentifying the pattern. Secondly, wait for wave C completion. Ensure that this wave C has completed before you enter your trade in the direction of the trend. Okay? It's important. This will prevent you from misidentifying the pattern. Okay? Since wave C does not fully break past wave A, look for signs of price rejection and reversal at the 78.6% to 88.6% Fibonacci retracement. And then finally, you can enter on confirmation. Since wave C doesn't fully break past wave A, you can see it doesn't fully break past wave A. Look for signs of price rejection and reversal at the 78.6 to 88.6% Fibonacci retracement. But so it's important to take note of that. Then once you see price action signals like pin bars, perhaps let's just assume that we have a pattern here, even though that this isn't exactly running flat pattern, but let's assume that we have a running flat pattern. Then you have to ensure to look out for candlestick patterns, for example a pin bar or an engulfing pattern, or a divergence on indicators like RSI or MACD, just to confirm your signals, to confirm your entries. All right, to confirm your entries. Then you set your stop loss and take profit levels accordingly. Okay, your stop loss should be below the last. Your stop loss should be below the last low of wave C. That's for a buy. For a buy, it should be below the last low of wave C. Remember that wave C is in 5 waves, right? So it should be below the last low of that wave C. That's for a buy, or above the last high of wave C for a sell. All right. Now your take profit, you can aim for 127% to 161.8% of your Fibonacci extension of wave C. So this method helps you to maximize potential while keeping risk low. All right. Now, even experienced traders can fall into traps when dealing with running flats. Here are some mistakes to avoid. The first is confusing a running flat with an expanded flat. Now, this is an expanded flat or an extended flat. Okay, so do not confuse a running flat. Do not confuse a running flat with an expanded flat. Okay, you can see the difference. Expanded flats have a deeper wave C. Can you see that? It has a deeper wave C that goes beyond wave A. While running flats, as you can see, running flats get rejected early and continue the trend quickly. Another mistake is entering too early. You have to wait for confirmation signals before placing a trade to avoid unnecessary losses. Okay? And finally, it is bad to ignore momentum and volume. Low volume in wave C often signals an imminent trend continuation. So always check momentum indicators before entering. And that is a wrap. Now you know exactly how to identify, trade, and avoid mistakes when dealing with Elliott Wave running flats. This pattern is a powerful tool that can help you anticipate trend continuations and stay ahead of the market. If you found this video helpful, hit that like button and subscribe for more in-depth Forex trading content. Also, let me know in the comments, have you encountered a running flat before? How did you trade it? Let us discuss in the comment section. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.